Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. In this video, I'm going to cover the RSI indicator. It's called the Relative Strength Indicator, and we're going to look at 8 trade signals that you can use when trading the RSI. There are many more, but I'm going to focus on the 8 main ones that I use in particular. Then we're also going to look at 3 ways of trading the RSI on a manual, automated, or linked basis. But first, let's look at what the RSI does. And essentially, it is a momentum indicator which works on a scale of 0 to 1, and it tells you the relative strength of one particular currency compared to another currency. And it measures the real strength, and I'm not going to go into the technical part of that, but basically there can be price movements that occur on a price chart which don't have a lot of significance behind them, and they are very easily reversed. So it actually measures the real strength, the volume and intensity of a particular move. So if we look at a chart of the Aussie yen, you will see that when the Aussie is weak relative to the yen, then the RSI is low. When the Aussie is strong compared to the yen, then the RSI will be high. So it's measuring the relative strength between the Aussie and the yen. And that's why it's called the relative strength indicator. And in that process, a lot of traders like to think of these high levels as overbought, and these low levels are as oversold, and they like using 80 for overbought or 20 for oversold. You can obviously vary that according to your personal preferences. I in particularly like using the RSI set to 4, which is most probably what will be shown in most of the examples in this video. There are, however, ones that there are variations on that. So let's move on. And the RSI is a momentum indicator and is best used in a sideways or softly trending market. It should not be used in strongly trending markets like that, as it will give a whole lot of false signals, as we will see later on. But you can actually use that to your advantage, so we'll cover that too. Reversal should not be traded in a trending market. So in other words, when the market's trending, don't trade against the trend. As simple as that. And the RSI should be used to get into trends and not out of trends. So they're ideal when the market's moving sideways. It will tell you where the breakout's going to, which direction the breakout's going to happen, and then you use that to get you into the trend, but you don't use it to get out of the trend. It will all make a bit more sense as we go on. So the dangers of the RSI is that don't trade reversals in a trending market. I've already mentioned that. And then the RSI does repaint. So it gives you a certain reading, and then a minute later you look at the chart and that reading is no longer valid. So most of the trading is done on what we call the closed candle basis, because the closed candle gives you a definite reading. It says at that point, this is the reading of the RSI. So just bear that in mind. Be cautious when making trades using the forming candle, as it can repaint. Having said that, the RSI is by far the most leading indicator that you can find in technical analysis. Okay, so let's start with a very basic signal, and that is the 50 line crossover signal. So what happens here is that when the RSI is low, it's saying this currency is weak compared to the currency it's compared to, and when it's high, it's strong compared to the currency it's being compared to. So obviously when it crosses the 50 line, then lots of things actually change. The currency is going from a strong position here to a weak position there. So that's obviously a potential trading opportunity. Now here's one where I don't use a 4 RSI because it will give a lot of false signals. I use settings that are pretty large, like 13 to 21 for these kind of trades, and you then trade the 50 line crossover. So like there, it's crossing over, you would sell that, you would buy if it's going up, you would sell, buy, and you can see the results of those decisions. Because the RSI is pretty sensitive and fast, you get into the trends pretty quickly. Look how quickly that one was a bit slower, that one's not too bad, that one's not too bad, and so on. And there you caught a really good trend. The first signal and the most simple one is the 50 line crossover signal. Just a tip, you need to use settings that are pretty high for good signals on this particular one. Then signal number 2 is the overbought and oversold signals. Now I have mentioned that when the RSI goes over 80, and these can be changed by you if you want to, but if they go over 80 and they come back out of that 80 zone, that is a sell signal. And again, I've marked this chart to show you the sell and buy signals, and there you would sell at that point, you would buy at that point, you would sell at that point. It's going over, coming back, it's going under, coming up, going under, coming up. So it's a very simple system. It works phenomenally well, and I'll show you a trading account that I use where I've increased my live account quite considerably using this simple technique. So that's another technique. So as I said, it's pretty simple. After it's gone overbought, you trade the move back out of the overbought, and the same thing on the oversold. And again, people watch these videos and say, oh, please send me a course on this. This is the course. How much more simple can that explanation be? All you need to do is go and trade it. As simple as that. Okay, so the next one is a divergence. Now remember I said that the RSI measures the true strength of a move, and that's what causes these divergences. So for instance, the price is going up over there. You can see if you draw a line over the tops of those candles, it's going up. But if you look at the RSI, it's actually going slightly down. So a divergence is telling you what you're seeing on the chart is not essentially correct according to momentum principles. So here's a very good one. Look how that chart is going down. This one is going up. That one going down, it didn't result in much of a move. And then that one, who knows what kind of move we can expect, but we can most likely this one will shoot down. So those are divergences. They are actually not trading signals. You use them in conjunction or to support other trading signals, but they are very, very good warnings that support your trades. So if you can find a trade like this particular one and we'll see later on, you can do a trend line violation on this one, and it's supported by divergence. It adds so much confidence to your trade. Okay, so let's move on to the next one. Here's a less known one. It's the squashed readings signal. And what it's basically saying is that when the market starts trending, the RSI will not reach the overbought environment. See how that trend is happening, and it's not reaching that overbought environment. Now that's very critical information, because it's basically saying the RSI works best in a sideways or a softly trending market. This is a strongly trending market. Stay away. That's basically what it's saying. So it is a negative signal. It's actually a don't trade signal. Again, as I said earlier, it should be used. There's the buy, there's the sell signal. It should be used to get into the trend, and then not used to get out of the trend, because you're going to get false signals. And also, whenever you're considering a trade, for instance, let's say you're considering that buy signal there. Now that is a buy signal per the previous technique that I showed. That's a buy signal. You've got to look back and say, when last was the EA overbought? And ideally, we want an EA that's going overbought, oversold, overbought, oversold, overbought, oversold all the time. Now, this one's way back over there that has gone overbought. So that's another warning for you to say, no, I'll hang on and I'll wait until there's a healthy movement of overbought, oversold, overbought before I start trading again. Here's actually one of my most favorite manual trading systems, and that is the trend line violation system. So what the trend line violation system says is that if you've got an overbought environment like I've got there, and the RSI goes oversold, then draw a trend line over any of the turning points, and when the RSI cuts that trend line, you trade, and if it's cutting it from the bottom up, then that's a buy signal. So you trade the buy signal, and I draw a line here to show you how the RSI trades into the future, in that there is the real trend line violation. It's only happening on that candle, but the RSI is telling you to already trade on that candle. So that's why I think of the RSI as a leading indicator rather than a lagging indicator. So that's as simple as that transaction is, and all you need to do is perfect this. You need an overbought, oversold, and a trend line, and you also need nice full waves. If they're small little waves, they're less important, but if they're nice big waves, they are more important. So the trend line violation is another technique that you can go and experiment. Then there's the hook version, and quite honestly, this is just a refined version of the overbought and oversold signals, and basically it just says that if you get a sharp hook, then the signal has more value than a soft hook, and that's what I would call almost a non-existent hook. That's an almost non-existent hook, but a sharp hook is adds more confidence. So it's a bit like a divergence. It just gives you confidence. If you're trading, you might want to trade this in conjunction with other techniques. Then the seventh one is the exit signal. Now, the exit signal is actually quite interesting, because it says, all right, now you get into a sell, the market starts trending, and the question is always, when do I get out of this trade? And one of the best exit techniques that you can get is if you're in a sell, you get out when it goes overbought again. It sounds a bit Irish, it's a bit the wrong way around, but that's, I have found, has kept me in trends a lot longer than any other technique, because psychologically to stay in a trend that's doing this is a difficult thing, and this technique is really a good psychological technique, because it says, okay, I'm in a sell, I'm only going to get out when it goes into the overbought environment. It's not a very well known one. I use it a lot. It's a very good guide to keep you in a trend. And then here's another trending. Now, I know the RSI is actually not a trending indicator, but here's one way that I use it in a trend. And again, we've got the same old trend that I've shown before. There's the initial entry, and it's saying, all right, I know the market's trending. How do I join this trend? It's frustrating. So the way I do it is I say, all right, I'm looking for an oversold signal. There's the oversold. And then when it goes over the 50 line, so now I'm not using the overbought level anymore, I'm using the 50 line. So I'm saying if it goes over the 50 line and comes back, now it just marginally came back, then I'm going to join the trend. So I would sell there. Again, it's gone oversold, overbought, there's the signal, so you sell there. On overbought, goes there, comes back, there's your signal. Again, same thing, the oversold, then it goes over the 50 line, comes back, there's your signal to join the trend. Same thing here. So yeah, I think you get the message. So that's signal 8. Now there are a whole lot of other signals for the RSI, but I thought I'd just show you these ones. Some of them are not that well known, others are being traded very actively all the time. So let's move on to have a look at some other aspects of the RSI. Now again, a lot of people are concerned about what settings should I use. When it comes to overbought readings and oversold readings, the shorter the signals, or the shorter the period that it's measured under, the better that I've found historically. So I trade the 4-1 because it goes overbought and oversold very often. The 12 will not go overbought and oversold very often. So if you're trading those kind of techniques, you'll virtually never get a trade. And so I'll use the 4 for the trend line violation and the overbought and oversold, and the with the trend 50 line crossover and those kind of techniques. I would use the 4, and then maybe for the 50 line crossover you would then use the 12 or so. But experiment with it. Put 2 RSIs on the chart at the same time with various settings and see which ones you like. There is no right or wrong. These kind of settings depend on the currency you're trading, on the time frame you're trading, and the volatility of the money of the market at the time of trading. Now you can trade this the RSI in various ways. Now here on your screen is my manual way of trading it. So what I do is I actually squash the chart up right into the top of the thing so that I can see only the RSI indicator, and I can then, based on just the RSI in there, I can then make tradings. Now there's a signal, and I can then open the chart and see what the chart looks like. And there's a signal I can open up. There's a signal I can open up. The others are not really good signals. There's a nice signal I can open up and have a look at the chart on it. So this is how I would trade the RSI on a manual basis. I'll look at the whole market. You must look at the market because it does give great. You see, there's a really build-up signal coming up over there, but it takes you a minute to look at the whole market using this on a manual trading basis. Then there's another way of doing it. We have got a indicator called the 360-degree market view, and it is really fantastic because you can set the overbought and the oversold settings. You can set exceptional settings on this indicator. You can watch the whole market as I'm doing there. So I don't have to look at the charts. I can actually just say, this is on over a weekend, so we're not getting really great readings, but I can actually say, all right, where are the most oversold currencies, where are the most overbought currencies, and where are my trading opportunities. I can at a glimpse, I can see it, and it measures over all of the time frames. And you can also, if you get 3 of these in a row, for instance, if it's overbought on 3 of these time frames, that's what I would call almost a definite trading signal, and it will in fact print your trading signal, but you can decide whether you want 2 or 3 or 4 candles. That signal can also be sent to you in various ways: email, notifications, alerts, time signal. So this is a fantastic indicator, and it will monitor the market for you if you like this kind of approach. Then if you like the automated trading approach, we've got 4 EAs that trade the RSI. The first one is the tradable RSI, and it trades mainly the overbought and oversold signals. Then you have the divergence trader, which I've explained to you already. It looks for divergences and trades those for you. Then you have the RSI trend line trader. Again, I've explained that technique to you, and it will automatically trade those particular trades. And then you have the RSI envelope trader, which is a pretty advanced EA in that it trades the RSI on its own, it trades the envelope on its own, or it can trade the two together. But the thing about this, it then tops the trades up. In other words, it adds to the position as the trade goes on, and you can get some fantastic returns on your trades using that. So those are the 4 automated solutions that are available to you. You just use that link. Again, on this particular one, you just use that particular link, and these links will be available in the description of the video. Then the 4th way that you can trade the RSI is just simply link to my trading account, and here is the trading account. It is trading an EA. It is trading the tradable RSI EA, and this has been running for just under 2 months now. It's making just under 20% return on investment. You can see I've invested quite a lot of my own money in this particular technique, and it is going pretty well. I had a bit of a bumpy start, and then I changed the settings and away she went. So if you're interested in linking your account to this type of approach, there is the link. Now, I hope you've enjoyed this video, and I hope I've given you some ideas on how you can use the RSI to really create substantially good trading signals. It really gives you a very high success rate. For instance, my trading account that I've just shown you has an 80% success rate, and if you spend quite a bit of time on this this indicator and get to know it pretty well, your trading will improve dramatically. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Deploy, cheerio.